Welcome back everybody to a new YouTube video, and today we're back on a Wednesday. I believe today's August 7th, and let's get right into the stock market news. So the number one on the stock market list is Crowdstrike. Crowdstrike is now trading at 235.56 in the pre-market hours. It is up a good amount of change, around 20 bucks since August 5th. Actually $30 since August 5th, but I bought in at the 216 range on August 5th at 11 a.m. This isn't easy still. There was so much news coming out with the hedge fund manager doubling down on CrowdStrike. He bought some at 300 and doubled down at low 200s. Also, CrowdStrike's just a great company. The language that they code in, I think it's something with Arc or Arsenal. It's not your normal programming language that you typically code in. This is very complex and complicated, and it's not easy to replicate. They have a big infrastructure of things. They have good partnership with Microsoft. They're not going to be replaced. Like, if they're going to get replaced, it would take so many years. And the only thing that's going to happen is I see this as an institution play where they just want to bring the price down from the 385 level, and because of the shutdown, bring it to the 200s, which they already did. And they want to bring this back up so they can make some money. So that's why I bought call options at 216, because that's a steal. Now it's at 235. So you have to think like an institution when you're playing some of these stocks. You don't want to just invest in certain stocks because you think they're going to go up. Some of these things are based off scare, anxiety, emotional fear of investors. And there's algorithms out there that these institutions have on whether or not people are going to sell and fear that they might lose some money. When that happens, that is when institutions tend to buy in. So if people were holding CrowdStrike at, let's say, 300 something, and they plummeted this down all the way to the 200s, it's a great buy for them, because if they buy call options, same with me, they probably bought call options at the 200 price. They're probably up so much money right now. That's crazy. I'm only up around 15 to 20,000, but they're probably up over 200 or something, maybe even more. But yeah, I think they did it on purpose. I think you can see CrowdStrike maybe hitting 250 by, actually, I don't, okay, yeah, it could probably hit 250 by end of September, or not, I want to say end of September, I'd say end of August. I'd give it 250, because I do think that all the prices might drop a little bit more in September, just because of the Fed rates and politics and geopolitics as well. But you could definitely see some good things happen with CrowdStrike. It'll go, if you're holding this in the long term, it's gonna go back up, probably hit the 400 range eventually. Number two on the list is Nvidia. Nvidia, I talk about it all the time. It's gonna go back up. It's only down because of first, the dollar is down. Second of all, the big tech sell off. Right now, if you look at the VIX, the VIX is the volatility on most of these stocks, and I think we hit, yeah, on August 5th the volatility went to 63. Normally it's at like 25, but the volatility is so bad that it's just plummeting all these stocks, or making them move up and down vigorously. And you can just see Nvidia go up from here. I do like Nvidia as a stock. They have a good, healthy balance sheet. Number one top chip maker company in my opinion. I think AI, people say is AI bubble bursted already. Yeah, it did, but I think Nvidia's bubble is still to come. I think it can push 160, 170 by end of December. That's what I'm hoping on. That's what I'm betting on. And I do believe that's going to happen. Number three on the list is Dominos. You know, Dominos is trading pretty fairly well. The reason why I bought Dominos at 421 is because of recession. Same with McDonald's. McDonald's, I bought it at 255. Now it's at 269. You can see Domino's, McDonald's keep slowly going up. Coke is one as well. Coke is very, like, it could be a good sell here. It could be a buy. If you were holding, in July at 1,000 range, you probably made, 20% on your return. But do I see this going up? Yes. Depending on markets, I do see Coke going up because it's so cheap. And if we do have a recession, a little recession in September. I do see this going to 1300, maybe even 14, and then that's a good time to sell, because I believe that this is just a market scare. This is just a growth scare right now. This should just scare off investors, and then people are eventually just going to buy back in. That's what I'm doing as well. Number 6 on the list is Lyft. The reason why I'm taking a look at Lyft is because Uber had good earnings. Uber is up, I think a couple of percentages. I mean, yeah, if you want to buy Uber, go for it. But the reason why I chose Lyft is because Lyft is the secondary to Uber. It's a competitor. It's down 142. I think this could go back up. Even though they're burning through cash, the price to earnings ratio is not that great. Market cap is at 4.43 billion. The platform is still good. I think you can see a big jump on Lyft eventually, especially if they add a Lyft functionality where you can order food. I do believe that they are working on that. I think you see a big jump in Lyft. Number 7 is T-Mobile. As I said, as recession is getting near. T-Mobile's not going to go down because T-Mobile has one of the cheaper communication services. I think T-Mobile's slowly going to go up. If you want to buy this as a long-term play, yeah, go for it. And then I'll sell this at the end of September. Probably hit 190 something. But you're making percentages off the stock, so that's great. 8th on the list is Starbucks. I've been told that a lot of institutions are buying Starbucks at the $70 to $75 range, and they are planning on selling this when it hits 90s, and you can make like a 20% return on this. I mean, I believe them. The only thing is there's a lot of competition in China against Starbucks, so they're not really going to get a lot of sales globally because China's sales for coffee are way more cheaper than compared to Starbucks, but Starbucks is just a well-known brand. 9th on the list, we have Disney. I've been told to buy Disney, whether it's 85 to 80 range, maybe even under 90, but I wouldn't buy if it's above 90. And as you can see right here, I was just on CNBC. Disney beats estimates as combined streaming services turn a profit. I mean, yeah, they own Hulu, Disney Plus, and ESPN. I do think people are going to keep buying those services. Disney, they're coming out with some VR tech as well. Yeah, I would say definitely invest in Disney. I think it's going to go up a little bit more. You can probably see this hit the hundreds again. I think you can see a jump in the 90 range by November. So when November comes along, you could probably. I wouldn't even sell November. I would sell January or April and get your like 30% return. That's my opinion. And I guess that's it for the stock talk. If you guys have any questions, let me know. Always shoot a comment in the videos. I'll be happy to answer them. I'm trying to get back on this routine where I'm posting every day just to give you my plays and share my thoughts. You don't always want to invest in tech. I know that tech is the big hot thing right now, and AI this, AI that, but market right now is just looking like a growth scare. I think if you keep buying the dips, I think there might be a bigger dip in September on certain stocks. You buy it up. That's the perfect place to buy, and it's just going to keep rolling up. SPY's down. I don't even want to open up SPY, but SPY's down a lot. I think you're going to see a rebalance on SPY. Oh, and if you want to buy one of those ETF stocks, maybe buy Vanguard Growth. So that's looking like a good one. All right, that's it for this video. If you guys have any questions, please let me know. Please like, comment, subscribe, and that's it. Thanks, guys.